If the rally that's taken stocks to 5-year highs really is at risk, what role will the infighting inside the nation's central bank play? Senior economics reporter Steve Leisman is here with that story. And Steve, it's good to have you back. If the minutes unveiled anything last week, but besides the fact that they spooked the market momentarily, they really showed that there seems to be a battle inside the Fed. How real is it?
Well, what's interesting, Scott, is that there's not one but really two battles. The first battle is the one I think the market expected, which is that there's differing opinions at the Federal Reserve over the pace of improvement in the unemployment rate. Some guys think it's going to happen sooner, other guys later. Some guys have one metric, and, of course, women are included here, too, as well, for when the we'll hit that 7%. With all due respect to Janet Yellen, Senator Pianalto. So what you're looking at right here is the count as where everybody is in their forecast 2013. You can see a pretty solid majority. 16 of the 19 are at 7.4% or higher. To be sure, the Fed has had this wrong in the last year. They were almost a full percentage point wrong at the beginning of 2011, or the end of 2011 when it came to 2012. The other fight is the one that's more interesting. The minutes note that several members of the Federal Reserve Board are concerned about the balance sheet and the unwind of the balance sheet. This means they're concerned about taking losses on the balance sheet. They're concerned about what happens to the payments the Fed has made to the Treasury each year. Nearly $80 billion the last couple of years. Probably going to be around $80 billion this year. So the Fed could take losses. And then the other problem right now, almost a political problem, also an economic one, is that in order to keep those reserves from becoming high-powered inflation and becoming loans, the Fed's going to pay interest on reserves. Depending upon what happens to interest rates, those numbers could be tens of billions of dollars that the Federal Reserve will pay the banks in order to not make loans. You think the Fed has problems now? Wait till that happens.
Well, so what are the traders then supposed to do with that information?
So right now we have to watch very carefully the meeting at the end of this month, but also the statements. What we need to know is who are these folks who are concerned about the balance sheet. If they're one set of characters, the guys who have been in opposition to the Fed all the time, that's not a problem for Bernanke. But if it ends up being the guys who have the centrist guys, maybe members of the Board of Governors and other centrist presidents who have supported Bernanke, then you